Tara Saluti, and I've had YourBiz open for almost 4 years. Before that, I was an internal auditor for a lot of Fortune 100 companies. So I'm a certified QuickBooks Pro since 2008. So I've gone through the Pro process every year. So I'm involved in the upgrade. All right, QuickBooks itself starts with setting up a chart of accounts. And in accounting, we have 3 main statements: the profit and loss statement, the balance sheet, and then a statement of cash flows. Most of you probably don't worry about the statement of cash flows. I'd actually be surprised if you did. Happy, but surprised. So we're going to focus on the P&L and the balance sheet. So QuickBooks sets these up through the chart of accounts and how you assign a customer or a vendor or a bank account. So if I'm set up a bank account, I'm automatically in the asset portion of QuickBooks, okay? If you don't label the account correctly, you're going to start off in trouble. So I want to spend a little bit of time going through kind of true accounting and QuickBooks accounting, because they're different in some senses, okay? We are going to use a construction firm as our sample company today out of QuickBooks. So I've pulled some of their accounts here, and we'll look at the chart of accounts. Income, pretty straightforward. You can call it revenue, you can call it sales. At the end of the day, it's still the money coming in the door. Expenses are the normal operating, everyday cut the checks, okay? So all of my vendors are going to be funneled through expenses and will be through enter bills, pay bills. The assets, bank accounts, accounts receivable, any prepaid expenses, inventory if you have it. How many of you have inventory? Nobody really carries it that I know of. I mean, in this room. I think where most people have issues is actually in the liabilities section, because the payroll liabilities, the sales tax liability, and how that works in QuickBooks is not very intuitive. And it's also not what you would expect from a true accounting standpoint. How many of you have had some accounting or just learning QuickBooks? Okay. So I'll jump into that in a second. And then equity is whatever you may have put into the business to start it, or your owner. Any draws that they may take, which we will talk about because I need them for the board. And retained earnings is just net income that rolls back over.